Hey folks, Dan Frio here, the rate update. Today we're going to talk about should you buy a house in today's market or not. So don't go away. We're going to be right back. Okay, today we're going to answer two questions. One, is it a good time to buy? Two, is the housing market going to crash? This article is a perfect example of answering both those questions with one, basically, CNBC post. Okay, so what we see right now is there's been over $2 trillion in equity built into people's homes. There's excess equity in housing of $2 trillion that was created over the last 3 months. That's crazy. Okay, so let's debunk first the housing crash. Okay, what caused the housing crash? Bad loans. Everybody was at 100% of their equity in their house. Okay, so they couldn't sell their home because they couldn't get out of the mortgage. They owed as much or more on their home than their mortgage was. Okay, they couldn't sell it. So what would they do? They would get an attorney. They'd try to do a modification. They'd do something, and they would stay in that house for another year or so, and they'd get foreclosed on. By that time, the bank is so far underwater, the house probably deteriorated, the housing markets basically subsided, and then you had millions of people putting their houses on the market and or getting foreclosed on. So there's tons of supply. The demand, people were just cherry picking and finding properties to buy, and so there wasn't huge demand because people are like, well, the housing market's crashing, I'll just wait and let it crash a little bit more and just start picking up houses on fire sale. Well, what happened with that? Well, let's forward fast it. There's been a ton of equity built in the houses now, the feeding frenzy. Okay, but there's very strict guidelines in mortgages. It's very hard to get 100% financing unless you have a USDA or a VA loan. In most cases, you have to have skin in the game. That's one. There is the second scenario behind this. The loans that are out there right now are solid A loans. Okay, back in the heyday when everything crashed, you had stated loans. We called them liar loans. If you had good enough credit, you could buy a house. You didn't even have to really verify your job. Okay, those do not exist anymore. So the loans now are very much put in solid underwriting, through a solid underwriting process, and most people have to have skin in the game. Okay, so that's another area that we've really corrected ourselves in. Okay, so now you have somebody that is in a situation, they're having some hardship, the pandemic, the coronavirus, or so forth. Well, back when everything crashed, you didn't have what's called this Forbearance Agreement, or part of the CARES Act, where it would allow you to postpone, up to, in some cases, 2 years or at least a year and a half of mortgage payments. So that's basically, you don't have to pay those mortgage payments, and they're taking the balance and putting it at the end of the loan. So you're getting people through that pandemic. However, you still have the housing values going up and up and up and up and up. So you have that as the backdrop as well. I know I'm all over the place, guys, but there's a lot of good news in this information. Okay, so you have house equity, or equity in housing. You have those that really were in need of not being able to afford their homes on now a forbearance package. You have the economy that has over 9 million open jobs. You have the part of the CARES Act that generated or is paying out unemployment benefits in excess of what they used to be up and through, in most cases, the end of this year. So there's a backdrop of a lot of good news. There's jobs out there. A lot of people, over 1.8 million people, are in forbearance, not making their mortgage payment. The unemployment benefits are making a lot of people, let's say half the economy, more money than they've ever made. Most student loans are in deferment. So think of it, if you didn't have a house payment or a student loan payment, you'd save a lot of money. And then there's 9 million job openings. So if you're really in need of a job, you can probably find a job. Some can't, or some can't in the field that they were in, or some can't at the pay scale that they were at, but there's jobs out there. So the job market is there. Housing demand is there. There's equity in homes. So the scenario or the backdrop of a housing crash isn't there, okay? So that's the backdrop and a quick synopsis of the housing crash, or debunking that. The next thing is it a good time to buy? Is it a good time to buy Bitcoin? Is it a good time to buy Tesla? Only time's going to tell. What I would suggest, and I'll say this to my kids as well, don't feed into the frenzy. If the house goes on the market for $250 and somebody wants to buy it for $300, God bless them, let them buy it. Don't chase this, because here's what I propose is going to happen. Part of the CARES Act, we had that forbearance. So people, a lot of homeowners, 2 million homeowners, haven't had to make their mortgage payment in over a year, going on 2 years, okay? Why would you sell your home if you currently aren't making a mortgage payment, okay? Why would you sell it? Because if you sell the house, you have to find something. You have to rent. You have to live somewhere unless you live in your parents' house. So when you look at it at that part, it's okay. There's not that's basically explaining to you why there's not a lot of homes on the market and why people are holding back. Many people aren't even refinancing to take advantage of these still historic low rates. Why? Well, because they're in the forbearance program and they're not making their mortgage payment. If you refinanced and got out of the forbearance program, you would then start having to make mortgage payments again. So my thought behind this, and what time will prove, is once we hit about September, people are going to be forced to go back to work, okay? Because all the employment benefits or unemployment benefits are going to lapse. At that time also, we're going to see the forbearances pretty much stop. The lenders are going to say, you had ample time not to make these payments. You're going to have to start making payments now. Everything's going to come back to reality. Then at that point, you might see a glut of homes come on the market. But because of that, you have all these people on the sideline ready to jump in and buy that glut of homes coming on the market. So you're going to have increased supply, and the demand is still going to be there. So you have supply demand, that the equilibrium is at the point where we shouldn't have a housing crash. And that also is explaining why there's not a lot of homes on the market. So hopefully I debunked a few things for you. I'll try to do a more detailed video on this, but this was the headline number, and I just wanted to come out and give you guys what the headline number is and kind of go over that. So tonight we're going to go over this a little more in detail, and then I'll go over mortgage rates as well. But I wanted to post out a special alert saying, for those out there that do own homes, kudos, guys. You picked a good time to buy because you have ample equity in your house right now. So that's it for today. Please leave some comments. Let me know what you think below on some topics that you want me to discuss. Please don't forget to give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. I'll talk to you soon. Take care. Bye-bye.